Hello, everyone. Good afternoon, December 31st, 2024. Happy New Year's Eve, everyone. We made it, end of the year. I got to see if I know how to do this. Yeah, I was on vacation and stuff and holidays and whatnot, but I wanted to come in and do this special. We're going to change up a little bit of the format of the show just to tweak a little bit to highlight a little bit of the year-end stuff, what really crushed it this year, and how you would have constructed. Not that that's the goal, but how you would have nailed 2024 this year. Obviously, allocations, and diversification is the name of the game. But we'll get into it. We'll get into the markets, what's happened since we've been away. So SPY closed at 586. When S&P was at 520, SPY 520 back in May. I said we were going to go to about 600 year end. It did get there. It actually punched through. And then like Tom Lee and JP Morgan, I also, kind of went a little bit higher and thought we even get to 610, maybe even 620, something like that towards New Year's Eve, which is today, but not the case. We'll see what happened with the Fed and everything else. But first off, let's get in the doc here. We'll get into everything. I am the Investopedia chart writer of the week. So you might have been seeing my articles. I'm talking about these very topics. What's crushed in 2024. I'm going through the top 10 absolute trades. And I'm also leading a webinar for the CMT Wednesday, the 8th at noon. So you could register at cmtassociation.com. And it's going to be a lot of this as well. We're basically going to go into these moves, sectors, subsectors, maybe even some single stocks that went berserk this year, and see if the trends still persist. You'd be surprised. A lot of them I do think still have legs, but you'd be surprised how some are, rebounding, and it's not quite the same trade. So without further ado, let's take a look at the doc. It is a pleasure to be here. Like I said, my next video after this will be on, well, we'll see. It's next year. Ha, ha, ha. So corny. But it will be, though. It'll be end of this week, Thursday or Friday, or I'll definitely try and do a Friday one. Anyway, so here we go. So trading trends, December 31st, 2024. Can't ignore that guy. We'll focus on the little thing that happened this week. Big rally in nat gas, 8%, and energy also had a nice rally, specifically in the XOP, the oil and the production side, and 5% drop in uranium. Pretty quiet week though, and like when I say week, I'm talking about since Wednesday till today. So 5 trading sessions, and then this year in our year in review, we'll highlight at the end. Remember, for the winners, Bitcoin, semiconductors, growth, and I do really want to focus on this because growth, that was not the leading ETF before. That really, when all was said and done at the end of the year, had amazing resilience just to own the growth story. We'll look at that. And airlines, that one persevered. It didn't have an amazing first half. I was writing about it today, but a great second half explosion for airlines. Those 4 areas crushed it. And on the losing side, there actually was a great loser to the downside. It was Brazil, which lost more than the S&P gain this year. And again, SPY closes year 2024 with up 24%. Again, this is what we were saying when we started this, webcast show in April, May. People, dancing about their 5% in T-bills and such. We said the market was going to do over 20. I think on my most bullish, as I said, we were going to do over 35% this year. That went to the large caps. That was my baby. I've been singing it all day, all week, all year. The XLG, that's your S&P Top 50. It did 33% this year. Since inception 20 years ago, it averages 23% a year. And that survived, obviously, a global pandemic and a global recession. I know it's a small sample size compared to the S&P 500s, but it's a great fund, the top 50. You'll join some stuff late, but it's an amazing fund. So let's get into the charts. Let me see if I can share this properly. That's me. It's just been a hairy holiday week. I hope everyone had a great Christmas. Jesus is the reason for the season. And also last night I had a great Hanukkah dinner at my brother-in-law's. A lot of fun. Love the holidays. Very fun stuff. Okay, is this proper? Here we go. All right, so real fast. So this is the intraday chart on the S&P. Just some single names. Again, we didn't get too lost in the single day moves, but it was not a great day for Tesla down 3%, Nvidia down 2%, MicroStrategy down 4%. We had Bitcoin at 93K. So we will zoom out and look at the intraday action first. So again, right here is the open. Yeah, pretty ugly trading all day. We started to rebound at 3 o'clock, though. We actually got to that VWAP, that orange line. So we closed down 35 bips. Not an awful close, to be honest with you. The volatility, as measured through VXX, closed up 60 bips. There has been a bit of an increase in volatility the past 5 days. We'll look at it. It was hard to find gainers, but vol was one of them. Today added 60 bips. As I zoom out, so it's been a while since we had forecast or anything like that. So my what I have here, I was looking at charts. Come back from vacation, I had to wipe the dust off the computer. But so my low date here was right around the 20th. All right, and then pretty much typically around 15 days, 15 off, taking me to a high on around January 5th. And my measurement is, so a little bit of a caveat. There's heavy resistance around 595 to the 600 level, which is right here. I'll put where my cursor is. Essentially, it's where we peaked on the 24th and the 26th. And then we started going right back down, but the small sample size. Obviously, this big bar here on the 18th was the Fed cut. I said even when things get horrendous, you can check the video from, I think it was 2-3 weeks ago. I said if things get really ugly, we go to about 585. On the 20th, 2 days later after the Fed, when the move was kind of confirmed, during the Powell speech, we went as low as 581. So within 1% of that. And then we went back to 602 just a couple of days later, the day after Christmas. And now here we are today at 587 after losing 35 bips. So I think we are going to get to about 597, which would be a nice $11 move, about 2% move from here. I would look for that in the next week or so. Again, there's a January effect. Typically, it takes place in the second half of the month. But I do think we have a little bit of bullishness, although you wouldn't have been, guessing it from the past week. But I do think we get to about 595 to 600 over the next 2 weeks. I wouldn't be shocked if we get as high as, 603 right around there. So I would expect some bullishness. I like these levels of hold to hold this 580 mark. I would just have to be super foolish if those election gap was going to give away. I mean, I just don't think it's going to. You just have a beautiful rising 200 moving average. This SPY chart, when we look at year in review, best subsectors and best areas to be in, best ETFs, this just on its own, the S&P is one of the best charts. And this is why you should always lean when the chart looks like this. Given the backdrop, you should lean into buying something. This has never had a 200-day moving average that even went sideways. It's always increased, and not one closed underneath it. A lot of people during Yen-Mageddon, a lot of funds closed underneath many, some for weeks, including winners like Airlines, Bitcoin as well. After August 5th, the S&P never did that. So if you just stayed long, you were, proven some riches with your patience. So that's my call for the S&P. I would look for some bullishness for the next 1 to 2 weeks to about the 600. It looks like I might get a little bit tired around the 602 level, so I was going to mark it right around there. But I would rather stay long. All righty, as usual. All right, next. Let's see what happened today. I'm not going to focus a ton on this, but it has been a while for the we've looked at charts. So, if you're holding this stuff, I'll give you an update since it's been a little bit. Nat gas, a big, today was actually down 6.7%. But in terms of the week recap, this thing is still up 8%. So this thing, remember we said this could be happening. I think actually a viewer, Chris, called this out before. It looks like this is starting to base here. So again, my mark for this is about 6 weeks to see what it does after the 200-day moving average. My first recorded close for nat gas above the 200-day is December 20th. I want to see how it does into early February. I think it's actually possibly it rounded at a base. There could be production levels of why I wouldn't plunge below $3 per barrel, per unit rather. So whatever it is in terms of the nat gas, this moving average is starting to actually climb up. The 200-day is going up from 1530 to 1531. That is, let me see here. I think there's a lot of bullishness right here that had a nice rally. It's starting to come off. You saw 2 ugly candles in a row. Nat gas went as high as 19.5 yesterday. Absolutely wild. And today it's coming down. Not going to pay attention to news. Don't care about that stuff. Looking at the charts, I think a natural place for this to come down is about 15 even, which is the 21-day exponential moving average, and also right around the 200-day moving average. So it'd be interesting to watch. I think it's going to have a tug of war, and it actually may end up holding. I want to see where this is in 2 weeks. If it's holding that 1530, I think you might have a long on your hands. I never thought I'd say it because this is one of the losers of the year, but it's done a decent job since bottoming on November 1st. I do think, though, this bullishness for this has started about, 2 weeks ago, given this rise from the 13 handle all the way to 19 and back down. I would say now it's starting to come off, and you saw the beginning of it yesterday and today. And I think this is making a move towards, again, it closed at 1682. I think this is moving towards a 15 handle, possibly 1480. All righty. If you have a ticker or something, put it in there. Having a special New Year's, Eve thing, I guess. Rocco didn't want to wear clothes. What else is new? And look at that, my invisible bow tie. All right, so next is XOP. So nat gas is the biggest winner on the week from the long side, up 8%, but giving up much of that today alone. Next is XOP. It was up 1.3 today. It's up 4.5% on the week. Look at this. This, like when this happens, look, technically speaking, on 9/11, this hit a low of 124. And then we got a couple more chances again the week before Christmas at 124. And now it's just been green ever since the 20th. Right off the bottom, 125 to 132. What are we seeing going forward with a heavy resistance at $142? I think this is going to try and make a run towards about one. I think it's got a little bit more to go, given these candles and whatnot. It's going to go to a little bit more of a troubled spot. I think it's going to try and make a rush towards 136, right around there. We'll see how close it gets to 142. I don't think it does it, considering this is already part of the move, and this has been off of oversold levels. So that slingshot is snapping right back aggressively. I think it could get there to 135. We'll see if it gets as high as 137, but I don't think it makes around this 142. So, but nice job if you caught this move off the bottoms, if you thought the 52-week low and you were kind of a loser for shopping on that list. This time, it proved you right. So that's my call for XOP. A little bit more bullishness, and then it's going to probably hang in around this, 133 level. All right. Next, not a ton of gainers. I was really in the nat gas space the past 5 days, as well as the oil and gas exploration and production side. And how I know is that volatility has actually been rising, up 2.5% for the past 5 days. Today added 60 bips. So again, over here, it's been up, like I said, 2.5%. My call for this, again, it correlates inverse with what I said about the market. I think this will sell off a little bit, giving way to a little bit more bullishness into early January. I see this bottoming around, let's see here, about $38. And again, I do want to note that the 52-week low is $40. We're about, $6 away from that. I do think we get new 52-week lows in the VIX. We'll see how good people are feeling in January. But been calling for a while. It's tough. This also depends on how, this is a short-term future borrow. Again, so this hit the lows July 12th. It's hard to time, but I do think this should make new 52-week lows. Let's see if it doesn't do it next week, then I would think the next cycle, which would be early February. All right. Top three losers of the past 5 days. We went through the gainers, so pretty thin. Nat gas up 8%, and it gave a lot of that away today. Oil and gas up 4.5%, and then VXX up 2.5%. Let's go to the losers quickly. Uranium down 5% in the past 5 days. Today was pretty much flat, but look what happened here. So I love doing these tests at the 200-day moving average. Uranium, so coming off a 52-week high right here, October 21st, hit $34. Holding it, and then boom, kind of a calamity here. December 16th, it closes below the 200-day moving average. That's a big deal to me. Immediately from there, I want to see where it is by the end of January. I think this is going to have a little bit of bullishness, but maybe the best it gets to is right around 29. I think this 200-day moving average potentially is resistance for at least some time now, for the next couple of weeks. I want to see what it does. I think it actually does rise to not 29, potentially has 29.25. I think that might actually provide a shorting opportunity for, a tactical kind of downside trade. But I don't like seeing, new oversold levels for the first time since August, especially removed after the 52-week high, 2 months ago, especially in a commodity. When I see trade like this, it's been a winner, but I think it's changing shape, changing color here. I had been long calls, but no longer. So uranium, and also leading our list this week, top losers down 5%. Moving on, Ark down 3.5% in the past 5 days. Today it was down 1.5%. Obviously, a lot of this is Tesla and Roku and stuff. I think this is actually like an oversold buy level. I think this is a good level here, right around 55, 56. Again, the rising 200-day moving average is right here back at $48. I think I think this has a nice 2-week run, actually. I think this goes towards 59, if not potentially, as high as 62. I don't think it takes out this new 52-week high for it back at $63, but I do think it has a nice bullishness 2 weeks. If you want to capture some beta through these kinds of names, I think Ark is worth a shot. And in fact, I'm going to write that down for 2025, early next week. Look at this on Thursday, but buy Ark, ? And then I'll write, $55 would be a great entry. All right. And I'll write Thursday, Jan 2nd. All right. So Ark looks good. It's down 3.5%. I think it's giving you an opportunity. And then it's obviously correlated with this. The Mag 7 down the same amount, 3.5%, down 1.3 this week. These are the superstars, the bells of the ball. You'll see when we get to our year in review. You couldn't really avoid these names. Same thing. You might get this a little bit cheaper, specifically this ETF, maybe like 53 right here. This it's a 50-day moving average. That would be a great, to me, discount. Again, this peaked at around $59 2 weeks ago. So you're getting it on sale, just a quick 10% off. It's down 3.5% this week. I don't see these guys going away. Also, beautiful chart, kind of resembling what I said, the 200-day moving average. Always rising 200-day moving average, not one close below it, as well as no oversold conditions, always a line of buyers of some sort. This is worth more than another asset. So great looking chart on sale this week. Yeah, I would hop in if you're not soon. Okay, so top 3 trades of the past 5 days, wrapping up this part. Long nat gas up 8%. Congrats if you caught that in quiet December trading. Second was short uranium down 5%, and then long XOP up 4.5%. Congrats if you caught that. Claps. All right, now drum rolls. Top 5 trades of the past 52 weeks, and they're not all longs. There is a short in there. I bring to you number 1 best ETF 1x trade in the entire galaxy. It was GBTC Bitcoin. Okay, up 115%, meaning you doubled your money if you held this December 31st of 2023 through last year. Again, this last year, whoops, let me go on a 1-year chart. There we go. Hold on, I froze there. Okay. Yeah, so last year this had about like $37 or so, and here 74, and that's where your double is. So looking at the chart here, it did peak December 17th. I think Bitcoin is getting ready to go, specifically looking at this chart. A little bit more basing. I like buying it under 76. Obviously, you get paid in volatility with Bitcoin. I capitulated this year in terms of Bitcoin levels to US dollar. I got in at 60K. And yeah, up 50% on it or so now. And I've been long, I've been around, same equivalent levels. And you have to own it on the asset quail. I think it has a record setting, 3 out of the next 4 years. It's almost crazy how this thing trades. Conservatively, it doubles every year. Go look at the returns. And GBTC did just that this year. Like I said, this was not a pretty chart, though. When you look at the S&P, you look at Mag 7, these guys didn't have one close under the 200-day moving average. Typically, a lot of algos will sell once you have that happen. But given, and this is why you give a superstar a leash like this for, like a 40-year-old LeBron, happy birthday, to have several 0-point games in a row, because they're going to come back. So Bitcoin gave a lot of people stutters from August 5th, from Yen-Mageddon, really, and it wasn't out of the clear, I would say, till very close before the election. I would give it November 4th, the night before. That was really a tough period, those 3 months, but you got paid. The 200-day moving average was rising the entire time, and then boom, the whole Trump election triggered overbought conditions, and then we hit 108K December 17th. So again, looking at the chart, short term through this instrument, the GBTC, the number 1 ETF. I think this is prime right now for a buy. I think you can buy this very soon. I like Bitcoin under a 95, whereas I think it's at 94K right now. I like GBTC at 74. I think this gets to, I think it's staring at 78, if not 81 in the first half of January. So I like this one. Again, this thing has not really traded below 50 RSI since mid-September. I like that sentiment view pre and post-election. This has been in, more up than down. Let's just keep it simply in terms of quantitative speaking. The charts do it for me. But this has been really reflecting well in the past 3 months, and with new all-time highs in the past 2 weeks, is something you want to be a part of. Corrections will be a part of it, but this thing up 115% year to date this year, 2024. I think you have to own it, obviously. All right, number two, the most important part of the market. Bitcoin is not obviously a massive part of the market. It's worth less than gold. It doesn't, move more people than just bros vaping at some sort of place in Midtown and like Singapore. But a very important part of the market, absolutely, in terms of capex, in terms of job placement, in terms of a lot of things. This year's, this world's digital railroads is the semiconductors, and they look a little bit more troubled. They do not have highs in the past 2 weeks. The same old story. I mean, I'll cut to the chase. Obviously, love the group. Own NVIDIA is how I'm playing this one. It peaked as the problem when we were in ice cream. July 4 week, the week after, July 11, this thing hit 283 and has honestly been giving back ever since with a tight lid, a very tight lid at 260. I wrote this, I think, in my September piece for Business Insider. Like every rally basically gets to 260 and then it gives back. I'm calling for the same thing over the next week or so. From here, that's a nice move. We closed at 242. A move to 260 would be a nice rip. But that's as good as it gets. I don't know when the new highs come. Maybe it's NVIDIA earnings next year. Maybe it's a big rotation underneath with Broadcom accelerating and Micron and Taiwan Semi. You really get the flywheel of all different kinds of placed semiconductors. I'm not really sure, but for right now, it is absolutely range bound between its rising 200-day moving average at 241. There's your support, and you're getting a superstar group. This world's digital railroads, if you will, at the 200-day or 10-month price average. Okay. And your so your risk to the downside, I think, is minimal. And then to the upside, I think you're basically capped at 260. So a couple of things you can do. You can sell strangles. I could sell, the 235 puts, sell the 265 calls. I'm pretty sure about that. So I'll look at strats like that. But I do have a bias upside for the next 1 to 2 weeks or so. So I feel good about selling puts. Again, these had very few closes. In the past 6 months, you've had maybe a handful, maybe 3 or 4 or 5 closes underneath the 200 moving average for a superstar group like this. So number one, trade of the year, Bitcoin plus 115. Congrats. Number two, semiconductors. Like I said, I'd like another week or two of bullishness. I think it is down to today, 1%. I think it gets first stop to 247. And then I think it makes a run towards 250 to 255 over the next week or two. We'll see how strong it is. But I think animal spirits will happen in the market, and this will go higher with it. Okay, and this is interesting. So number three, IVW. So growth as a whole. And just so we're not just assuming here, I'll tell you what is heavily weighted in this fund. This was not, I look at this stuff all the time. This was not one of the leading ETFs like the entire time. There was home builders, real estate. Obviously, this was a third quarter story. And then there's more communications, top 50. And then really it became this growth fund and many similar growth. Obviously, growth was a story. It didn't sneak up on anyone. But this is 25% in NVIDIA, Apple, Microsoft. You get a lot of that in my baby XLG as well, which is the top 50. Go buy it. When you're done, go buy it some more. So here's the growth ETF. As I told you what names it's in. NVIDIA, Apple, Microsoft heavily. 1 second. Popped off my over screen. Yeah, so great looking flows. You're getting this on sale too. The highs came for this, December 18th at 105. I think this has some bullishness. This was up 36% this year. So again, if you focus and you take on that vol, you got 115% through Bitcoin. Wonderful. Then you got 39% through semiconductor. That was very focused though. You had to go crack down on NVIDIA and Taiwan Semi. Growth, this was more diversified, still obviously very heavy tech, hence the name growth. But that basket got you 36%. S&P got you 24% this year. So just telling you how to weigh your investments. Absolutely great chart. This had a little bit more a fine line closing with the 200 moving average on August 5th, but we're knitting on hairs here. Never closed under the 200 moving average and no oversold conditions, just absolutely superstar condition. New high was within the past 2 weeks. Like it, nothing really bad to say about it. Short-term target, I think this rallies to 103. You got it on sale today by about 85 bips. I think this quickly rebounds to 103 in the short term and tries to make a move towards 107, which would be new all-time highs, and that's what I'm calling for, basically in the market as well. That move to 610. It might take some time, though. All right. The next one, this might surprise people. The fourth best trade of the year. It was not just another long, not getting cracked out on Palantir 4 times ETF or something. No, it was actually a short, gasp, and it was Brazil. Brazil actually got you minus 36%. Okay, so it's not just all longs. There is still place for shorts in a portfolio in 2024, the year of our Lord. So it was actually surprising. I thought this was going to base and hold on mid-December. I think we've been talking about it. I thought this was going to hold around 25, and the bottom really fell out. And then the Fed cut. Obviously, the dollar had implications, and this sank all the way to $22, which was its 52-week low. And now it's really not doing a ton. We're still trading at $22, down 36% this year. The chart got really ugly, and really no reason to own this as of early May. If you're really on top of it, you could have exited in early April after closing the 200-day moving average. But really, after April, there was no reason to hold this. Even Rallies didn't come close, except this August one. And that's because it was so stretched to the downside after Yen-Mageddon. This thing went from 26 to 31, which is a monster move. And then this is just a bowling ball or a bouncing ball off the table. Lower for the most part. Had a rally, lower, all the way lower. So I think this probably has $20 in its future, like a March time frame. It looks like it continues to want to shed the tune of, I mean, it did 3% a month on average last year. I don't think it has quite that velocity this year, but it doesn't seem so impossible that it gets to $20. All that being said, maybe you get everything rallied, like I'm saying, for the next week to 2 weeks. I think this base is around 23. This has come quite a bit lower. I think it does have a dead cat bounce rally to about 24, which would be a nice move over the next 2 to 3 weeks. Don't have a lot of faith in it, though, as we are talking about the biggest loser of 2024, EWZ, from the short side, down 36%. Yahtzee. All right, and then the last one, as we're trying to wrap up here, and it was from the long side. There was other short sides. They were LATAM related. But Mexico was on the list. Honorable mention to the downside. That lost about 30%. There was obviously several longs. XLC was a strong winner. Didn't quite make our list. And gold was very strong as well, just outside. But the other one we're going to include at number 5, best trade, was the airlines. And this was an interesting chart, actually. The Jets airline got you 34% this year. So that was the other best trade in the book. So again, for the whole year, Bitcoin plus 115. This isn't subjective. These are just numbers and 1x ETFs. And, due to the volatility, you could have weighted this your own way instead of doing 20% each. But this would have been the God portfolio if you knew this Jan 1 of last year or of this year. Bitcoin plus 115%. Semiconductors plus 39%. You could have got the top of that, which is NVIDIA. Plus 36% for growth. Again, that's an NVIDIA double play. Or you could have opted for an Apple, which was also hitting highs recently, and a lower vol, and is also big cap exposure. EWZ, that's a short. So that is something absolutely uncorrelated to the portfolio. That would have been nice. And then airlines plus 34%. Delta and United typically don't move exactly like Microsoft, Bitcoin, and or Apple, NVIDIA, and Bitcoin. So that's a great portfolio. I think this one might not work for the entire 2025, but I do like it. It seems simple. You might be a little bit heavy in some areas, but it actually looks nice. I might paper trade a little bit of it, make one in equal fists. I don't think that looks too bad, to be very honest with you. All right, so look at what I mean by the Airlines ETF. So pretty crazy chart. It was doing decently up until summer. And then again, a lot of things happened on Yen-Mageddon. It hit a 52-week low for this group very quickly. So literally the week before, it was trading $20 essentially. And then it went to 16 in just a week. And then it had a really tough month and a half. And then mid-September, it started to come back and went all the way to these overbought conditions, leading to its 52-week highs December 12th. I like this group right here. I was close to, or I had United on a buy list about a month ago, and it just ran without me, so I never got in. You can look at the individuals in here. This is heavy Delta, United, and American. So, yeah, I like this. I think this has a little bit more bullishness with the rally I believe we're going to get. I think this heads towards $26. The 52-week high is $26.12. It could potentially break that, I think. This one has nice momentum. And it's just an interesting chart, not like the other ones. S&P, Mag 7, never closed under. This is 5th best trade of the year, and it had this tough quarter, this tough piece here. Not even a full quarter. I'm thinking about it like football game terms, where it was basically, exchanging field goals, essentially range bound, nothing, boom, touchdown or two got scored on it, and then a lot of heavy work, and then just unanswered points, just scoring three, scoring 7, touchdown, and they end up winning the game to be on the leaderboard here. So congratulations if you own Airlines. We are the 30-minute mark. Thank you so much. It's been a great time doing this show with you. I will be doing much more next year. We'll be also doing single stocks more regularly, as I said. Sometimes that is an absolute crazy world. The top leader, I think, was SoundHound, up like 900% this year. So we'll go through it. I want to have, obviously proper parameters, so it's not just small, but $100 million companies that have news and the thing goes up 1,400% in a day. It gets a little messy, but I don't want to ignore, obviously, good names as well. All right, be safe. Have a great new year. Blessings to you. Infuse some kindness and goodness to people every day, buddies, and whoever's watching. All right, peace. Bye.